Holy smokes, everyone. All indicators are flashing code red for the housing market right now, and all the data we're getting is now comparable or worse than 2008. In 2020, we saw the crash of the stock market, the bond market, and cryptocurrencies, but in 2023, we're finally going to see the crash of the housing market. And people, I know you've heard it before, you probably think, oh, they've been calling for a housing market crash for 2 years, but people, the housing market is very slow to react. It takes a long time to get the data. Unlike the stock market where you can sell your stocks with a click of a button, it takes a long time. It's a long process to sell your home. It's a big decision. People take a lot more time to do it, but we do actually have the facts and the indicators right now that there is huge price declines happening, but it's not even the worst of it yet, people. It's going to get much, much worse. And don't take my word for it. I'm going to show you the proof, the facts, the news, and the data. So let's not waste any time, ladies and gentlemen. Let's get straight into it. Well, okay, everyone. First things first, look at this. Medium house prices are now down 11.3% from their peak in June 2022. Because what I see right now in the media, what they're doing is they're doing year-over-year comparisons. They're saying, well, look, house prices still up around 3% year-over-year, so there's no housing market crash. Well, that's very deceiving, everyone, because they're including the price gains from the first half of the year in 2022. But when you actually look from the peak, prices are down around 10 to 11%. And you know when I think people are going to really become aware, because a lot of people just read the headlines, they don't get into the nitty-gritty of the data, they don't do research for their area, because remember, the housing market is not just one market for the US. Same in Australia, it's not just one market for Australia. For example, California prices could be crashing, but this is just for example, not saying this happened, but then Texas, for example, could be going up, or Florida could be booming. So you have to get down granular to your area, do research for your area, look at the asking prices for your area, go to open for inspections in your area and see what the trend is. But I'm going to tell you the macro view, and this will eventually happen pretty much in all major cities, the prices are coming down. Because look at this as well. Record number of housing units are also under construction. Now, again, you don't need an economics degree to understand that it's simple supply and demand that make prices go up or go down. If there's been less demand, like they've been saying, there's low inventory. They've been talking inventory. There's not enough inventory. So that's why the housing market won't crash. Well, people, if there's records amount of supply coming onto the market, right, when there's also a decreased supply of credit is now more expensive, while prices just simply have to correct. But that's just the first piece of the puzzle, everyone. And there's already parts in the US where house prices are crashing faster than 2008 and have already seen huge price cuts. Look at this, everyone. House prices in the Bay Area have already dropped 25% just from their peak since April. So that's right, it hasn't even been a year yet and prices have already declined 25%. Now, what normally happens in general, again, this is just in general for the housing market, is when prices go up, for example, it's normally the premium end that goes up first, but they're also the first to correct. The premium suburbs, the houses are over $1 million, $2 million, because if interest rates go up 1%, that severely impacts someone trying to borrow $1 million, $2 million compared to someone trying to borrow $300,000 or $400,000. No longer speculation that we are in a severe housing correction, and this is the beginning of this. We're going to be in a prolonged downturn, and let me get into more data, more facts, more reasons why it is going to get worse, and also how we can take advantage of this, and when I think may be a good time to jump into the housing market if you're looking to buy your first home, or you're looking to upgrade, or you're looking to buy an investment property. Okay, everyone, another reason why the housing market crash is going to get worse. Look at this, everyone. The Fed's ongoing housing market reset sees buyer cancellation at one of the nation's largest home builders spike 68%. So that's right, everyone. Cancellations are spiking 68%. Why do you think this is happening? Well, there's many factors why it's happening. For example, someone may have signed a contract 6 months, 12 months earlier. They've agreed to a price and they thought interest rates were a certain percentage. Maybe they signed the contract where interest rates were at 3 or 4%, but now they're getting close to settlement on that contract. And now all of a sudden, interest rates are at 6%. They can no longer afford it. Another thing, maybe, for example, they've signed the contract for a certain price and now all of a sudden the housing market in their area is tanked. And if they build, they would be building at a loss, or they've had negative equity. Their loan will actually be more than the house is worth. So it may actually make more sense to just lose their deposit and walk away. Otherwise, they'll be facing bigger losses if they go ahead. A third reason is maybe they know a housing market crash is going to be coming, so they're canceling and they're going to wait on the sidelines for 6 to 12 months, however long it takes for their local area, for the housing market to hit the bottom, to re-enter. But I know what you're thinking, well, Michael, that's just the home building sector, that's just the construction sector, home sales are not affected by this. Well, people, we just got even more alarming data for home sales as well. Look at this. That's right, everyone. Existing home sales slide to cap the biggest annual drop since when? That's right, 2008. I've been doing a lot of videos recently, people, and what I'm starting to see more and more is the data is now either the same or worse than 2008. What does that tell you what we're about to be facing, everyone? But let's keep reading. Sales of previously owned US homes fell in December to the slowest pace in over a decade, capping one of the housing market's worst years on record amid a rapid jump in mortgage rates. That's exactly right, everyone. Again, it is supply and demand of credit, which affects the housing market as well, not just homes. A lot of real estate investing, it's not about buying homes. A lot of it is to do with finances, mortgages, and then it's just homes in the middle, which they make the money off. And another thing that media is going on about right now is, well, mortgage rates have dropped, so there's not going to be any housing market crash. Well, let's go ahead and look at the charts for mortgage rates right now, everyone. Look at this, everyone. This is the 30-year fixed rate mortgage average in the United States. We can see here during 2020 December, they hit a low of around 2.65%. And then they absolutely skyrocketed and they hit a peak in November of around 7.08%. Now, yes, they have dropped to 6.15%. But look at this, that is still nearly triple what they were before. So yes, we have had a pullback in mortgage rates, but they are still nearly triple what they were before, and they've been lifted so fast, we haven't got the data, we haven't felt the full effects of these higher mortgage rates because it normally has a lag of about 6 to 12 months. They also warn, while borrowing costs have come off their peak in recent weeks, helping to boost builder sentiment, the outlook is still shaky. Separate data out this week showed new home construction declined in 2022 for the first time since 2009, while applications to build a proxy for a future construction also fell in December. Because what normally happens when you go and apply for a mortgage, for example, if interest rates got 1%, that normally affects people's borrowing capacity anywhere between 10 and 15%. So mortgage rates are nearly 4% higher than what they were in 2020. So people's borrowing capacity has been reduced by about 40%. What this tells us, in general, the housing market could decline 20 or 30% from its peak. And let's have a look at a real example of how much more people are going to have to pay if they want to buy the same home, and again, how much house prices could correct. So look at this. For example, if someone was borrowing $400,000 in 2020 with a mortgage rate of 2.75%, their monthly repayment would be $1,633. But what happens now with a higher mortgage rate of 6.25%? That's right, their mortgage repayment goes all the way up to $2,463. That's an increase of around $800 a month. And this is for a home worth around $500,000 and a mortgage of $400,000. It's even more severe for homes $750,000, $1 million, etc. But I know what you're thinking. Well, I've got my mortgage locked in for 30 years, so this housing market crash won't affect me. It won't affect the value of my home. Well, people, it doesn't actually work like that. For example, even if you don't sell your home, but for example, on the street, if 3 of your neighbors sell their home and they sell it for $100,000, $200,000 less than your home's worth or what you paid for it, and they're pretty similar to your home, well, if you want to, for whatever reason, want to refinance your home, or you just want to check the value of your home, the valuer will go and look at comparable sales in your street to see what similar homes sold for. And if they're sold for $100,000, $200,000 less because new buyers, they can't get your rate, they have to borrow at 6%, well, then that means your home is going to be devalued as well, even if you don't sell. Now, I know what you're thinking, well, okay, how bad will it get and what could trigger a real housing market crash? Well, people, something that is going to be much, much worse than 2008 and something that could make this housing market crash worse and lead to a broader economic downturn, lead to a Great Depression is, unlike every other recession before, people were able to refinance their home, take out their equity at a lowest interest interest rate. But they're not going to be able to do this time, because when we enter a recession now, well, we're already seeing the huge layoffs right now. The big risk for people is when they lose their job, because then they can't make their mortgage repayments. They're not going to be able to refinance, because then they'll go from a 3% interest rate to a 6 or a 7% interest rate. Also, too, the equity over the next year or 2 years is going to be eroded, and they're not going to have that equity in their home to take out, because if prices drop 20%, they may lose the equity in their home. And for people that bought in 2021 and 2022, they may be underwater. They may be in negative equity, meaning they actually owe more than the house is worth. Because what has happened over the past 30, 40 years is we've had this huge economic boom. We've been on this prolonged bull market. Yes, we've had dips, recessions along the way, but over the long term, we've had this booming cycle. But what I think we're about to be facing is a period of higher inflation and slower growth, what they call stagflation. They're not going to be able to drop interest rates to zero overnight like they did in 2020, because they have a risk of inflation surging again. Yes, it's come in low recently, but what's happened in the past during inflation is once central banks see it drop a little bit, well, then they turn the money printers on again. People start taking on more debt like crazy, and then inflation surges high again, especially if there's some kind of black swan event that makes oil prices skyrocket, for example. Well, then that will make everything else more expensive, like what we saw happen in 2020 and 2021. But everyone, there's no guarantees. It all depends what the Federal Reserve does, if they do the right thing and keep on lifting interest rates, or if they panic, if they all of a sudden buckle to the economic pressure and start cutting interest rates. But again, even if they do, they're not going to be able to cut them to zero, because they have that risk of inflation surging again. So we're going to have multiple year stagflation, I think, and we're not going to have a housing market boom like we've seen for decades. So if you're in the market to buy a home, upgrade, buy investment property, I wouldn't be doing anything for at least 6 to 12 months, but you need to monitor the data in your local area, because a lot of people on YouTube, for example, they're just speaking in general. You need to track the asking prices in your area. Go to open inspections for your local area, because there could be one part of the country crashing, but there still could be another part of the country experiencing rapid price growth. But everyone, what do you think will happen to the housing market in 2023? Will it be the year the housing market finally crashes? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.